Good afternoon, everybody. This is Mark Lambert from Theta's Pendulum. We're partners with Tiffany Marino in our market timing and pricing service. As we ever try to improve what we do with our subscribers and so on, we'll be making changes probably within the next 2 to 3 weeks to the way that we either send out our newsletters and basically convey the information. We're trying to make it so that it's a little bit more accessible for myself and Anthony, where we're not pressured to have to put out basic reports every couple days or so on, but leave us to the point where it's like it'll be easier for us to send intermittent letters throughout the day. Basically, you'll be getting more timely information as it happens instead of just a report 3 times a week. We hope that will improve things, and like anything, it'll be very accessible to just about everybody. We're probably thinking of doing some type of Yahoo group or whatever, which would be very inexpensive to get on, and basically just compensate both myself and Tony for what we do, because it does take time to moderate things and so on, and kind of makes it easier on us because I don't I find myself frustrated sometimes where I've done a day of trading, I've made my profit targets, and to make a long story short, we will be making some changes. It'll be very inexpensive for anybody who wants to log on and learn, and also at the same time, we're going to make it accessible for other traders who also have other talents that are very useful, such as I've met quite a few people who use GAN harmonics, market geometry, all sorts of analysis that I have like a basic understanding of, but no expertise in. And it'll also allow them to showcase what they do too. And we want to make it one of those things, basically a site where nobody is secretive, saying, yeah, you're going to learn, you're going to do your work, da da da, and so on, which is very frustrating to me. I know myself, I can learn things, but a lot of times I might need some help to take that next step. But once I get that next step down, I can normally move forward, and that's what we want to make it. We want to make it a place where someone can receive any education they want if they're willing to work for it. If they will learn, and just basically to keep us all growing as traders. Anyways, I'm going to give a quick overview of the S&P 500 right now that I've been following this week, and give a couple accounts basically that I'm looking at that could be happening at this present time. I'm going to go over the long-term outlook, basically what I see happening. I believe since 1999 we've got a large expanded flat, which was a 335 sequence that the market makes as far as Elliott wave turns, and this was the last five. Just using Fibonacci expansion, as you can see, if I just take wave 1 here, bring it to the top of wave B, and then I bring it to the orthodox end of this triangle in this area, bring it right to the wave E, right there. You can see the market did a 61.8 projection of wave 1. We're a bottom. And they probably only missed this by, if we look here, probably only missed it by a point or two. So I mean, just to kind of show that this is what we're trying to do and what we're trying to convey. This is my long-term count. I do not believe we've done an ABC. Matter of fact, if anything, I believe we've done a 1, 2, 3, 4, and now we're in a process of either having finished a wave 5 or still in wave 4 presently, only to go make another higher high, at which point in time then we'll be able to sell off in a 3-wave sequence or some type of corrective manner. But I do not believe that this low will be reached at this point in time until the market proves otherwise. But either way, we are looking at this being as sort of a bearish divergence at the time. And I'm going to focus on what's going on right now, where I believe we're also doing another expanded flat. This is from the July 2010 low. We did a leading diagonal, which is a 5-wave sequence. Was 53535 in this particular sequence, and then this right here was an exact 1-to-1 Fibonacci ratio. Just to show what I'm saying here, to measure this first wave down to the orthodox top of that wave down, and bring it to the top of that one. We did exactly a 1-to-1 ratio. Okay, and this is basically what we do all day long, but even on smaller patterns. And right now, as it is, I believe this has been a wave 3 up to this point. Maybe wave 3 is complete at this high. So looking at the smaller 1, 2, and 3 here, I should really take them off of there because typically a wave 3 will adhere to the top of a trend channel, as you can see. And usually the first break downwards usually has to do with a wave 4. And as you can see inside of this box right here, I have this circle. Let's call it wave 1, wave 2, wave 3, and now we're in wave 4. I'm believing that wave 4 right now is at least moving in an expanded flat pattern, which is a 3-3-5. We've done ABC, which is the first 3, ABC, which is the second 3, and then right now as it is, we're either forming one of two things. We're either going to do a triangle, which we've done 1, 2, 3, then 1, 2, 3, and now we've done a leading diagonal, a zigzag, and then another impulsive wave down right here. That's another 3, which would leave us, if we're doing a triangle, we're going to do another 3, which may come up to around this area somewhere, and then another 3, and only to shoot to a terminal high. And that terminal high will be the one that will complete the 5-wave sequence that I just previously showed on a larger time frame. And when that one gets done, all I can say is I think you should buy everything. And we do finally determine the bottom on that because I think the market will skyrocket up after that point in time. But the other alternate, which seems to be one that's playing out right now, is that if this is a 1, 2, 3 or an ABC, and then another 3-wave sequence, ABC, and then now the alternative, which I think we've done in a larger time frame from 1999 to 2007, where we completed the B wave, and then so 2009 we completed the C wave. I believe this is another expanded flat where we're going to do 3, 3, now 5. I believe we've done 1, 2, and now we're in the middle of doing a wave 3. This wave 3 will come to a support at one point in time and maybe come back up here only to make a wave 5 that should reach this previous low, which a lot of times that may signal other traders to go short only to reverse and go back up to the upside. But either way, right now we're looking at more downside action to occur, albeit I do believe we may be at temporary support now. That's something I'll have to determine while I'm trading on Monday. But basically the market has taken this leading diagonal wave right here, which would be wave 1 or A, this zigzag here, wave B, and then this other impulsive type looking move down to wave C. This has done a 1 to 1.272 ratio, which is a harmonic ratio. This is, I believe, the square root of 1.618. So the 127.2 Fibonacci projection was landed on perfectly on Friday afternoon at the low. And also while looking at the ESs at this point in time, I know we've always made a lot of effort into saying that the first inflection of any market, which would be this area right here, always has a very important part to play in measuring where the market was going. And so far, it has not really been validated until Friday. Friday, the ESs, the S&P 500 futures, landed perfectly on a 200% projection. So at this point in time, we'd like to see like a high, even if it doesn't breach this previous high, we'd like to see a move come up, come back down, support higher, and then from there I think we can go long. But even still, I think that would be a tentative long, because if this is an expanded flat, and this could just be wave 1, wave 2, which just looks to have made an 11-wave sequence, so I think it's fully corrective at this point in time. This could only be wave 1 inside of wave 3, which we're looking for wave 3 to subdivide at least in 5 waves also. With that said, we could have some type of retracement up to maybe the 100% over here, or the 61.8, only to sell off again. And then the next sell-off should be, if it follows typical expanded flat characteristics, we're going to be in a wave 3 of 3 of at least 2 degrees of trend, and that could be a pretty horrific sell-off. It'll make this little sell-off right here look like it was child's play. Right, who knows, we could cover 40, 50 points in a matter of a 24-hour period. if not even less time than that. So anyway, just something to look at. Like I said, just opinion. Basically, when we trade, we do look at what's going on in front of us at that point in time because we are intraday and swing traders. So what's more important to us is what's happening in a small structure like this instead of the large structure. But we always keep the large structure in mind because that large structure will rule the market and give us directional bias that may last for several months, if not years. So anyways, have we topped? The only reason why I'm hesitant of calling a top is that if this was wave one after this ABC correction, which is the same as this one right here, both the cash market and the ES futures in this small area right here, wave one and wave four, have overlap. And I don't like to see that, which is why I'm a little hesitant of saying that this is the top. I think we're in for definitely a good correction. And then I think we'll make a new top. But either way, our bias right now is that we may be a temporary support for a bounce for a day or two, and then at which point we plan to sell into again. Whether it forms a triangle or expanded flat, really it's no matter right now. We'll let the market show us as it goes. And I'm going to expand on this little thing right here again at one point or another where I think Robert Prechter from Elliott Wave International calls a price gap inside of a wave 3 the Prechter point, which would be something like this right here, where you get a gap in the market which identifies the middle of the wave 3. I've also found that in the middle of wave 3s, especially when I look at smaller degree trends, that these price gaps oftentimes ends up not being price gaps, but a short area, a short spike of consolidation, only to keep moving back upwards again. So I think I'm going to call this the theta point, which also identifies you're either going to get a small area of consolidation in the middle of a wave 3, or we're going to get a price gap. If you can call it the Prechter point, I think Tony and I will call this the theta point. But anyways, we hope you find this beneficial to your trading, and this is the first time I do show kind of more of a larger view of what I am looking at. Only because, like I said, we are intraday traders, so this is just one of those things that we do. I mean, we trade intraday and these longer term time frames, and you can see they adhere very well to Elliott wave counts if one is objective and doesn't try to put a subjective view on a market, whether bullish or bearish, but just basically looks at what's going on in front of us. We have a 13 wave sequence moving up from the July 2009 low, which was a perfect ABC. And the 13 waves is considered impulsive. We had a 7 wave correction, including the flash crash and everything, which was pretty cool because I put the bottom of that pretty quick just by going on a trend line like this. I'd have to throw it on the ESs, but basically if you take a trend line going across this way, because at the time I thought we were forming an expanding diagonal, this bottom right here, bottom right down to the point as far as on the ESs. But anyway, what we have here is another 7 wave correction, and now we've been moving within a trend channel. Impulsive wave, corrective wave, definitely impulsive wave, and now I still think we're in a correction. This correction has all the latitude to come down to this top as long as it doesn't go into the wave 1 territory, which I believe is at 1131-ish or something like that, 1129, 1130, something like that. But I would look for a breakdown to maybe this area right here at this point. From there we'll see what happens. We should be able to gauge where the market is by looking at the smaller internal structures as it develops. And we do hope that you find these useful. And we'll be showing some more of these as we move forward with our newsletter or site or whatever we're going to end up doing. We do hope that it's educational for everybody and it helps everybody out. And the way I look at it, if I didn't have people showing me things in the beginning, I wouldn't be able to trade right now. So I think we all learn from each other, and just gotta humbly just thank everybody who has shown me things, and hope that in return I will be able to show them things too, and just keep moving this forward. Everybody have yourself a great weekend. Godspeed, God bless, and talk to you soon.